Hey everyone, back again for another edition of That's Our Two Satoshis Live, where we talk about things going on in the digital assets market. I'm Jeff Dorman, CIO of Arca. I'm joined by Alex Woodard, research analyst at Arca. How you doing, pal?
Good. Thanks for having me.
Yeah, so we're going to dive into a bunch of things, but before we start, quick disclaimer, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. But that's going to be irrelevant today because today we're talking about a token that doesn't exist anymore, the Tribe DAO, which has been liquidated. And Alex, you've been working on this for a while. It was pretty contentious. I know we normally don't talk about just individual tokens. We talk kind of broader themes that's going on in the markets. But one of the themes we've been talking about has been that in a sideways market where vol has been crushed and Bitcoin and ETH are going nowhere and macro is dominating everything, there's actually been quite a few ways to make some money in the digital asset market, mostly with short-term events trading around bankruptcies and restructurings and reorg blockchains and conferences and of course governance. So one of the things you alerted us to a while back was this Tribe DAO. So maybe give a little background first and kind of what this is, why you looked at it, and then why, in your opinion, that this was pretty much a farce when it comes to DAO governance.
Yeah. Just for some context, Tribe and Fay Labs. So it was a decentralized stablecoin project with Tribe being the governance token behind it and Fay Labs being the creators and Fay being the stablecoin behind it. So this has been a pretty contentious project pretty much since it started about a year ago. Most notably, they went through and acquired Rari, pretty much a yield optimizing protocol on ETH as well. That was probably one of the main starts of a lot of where they had a ton of problems because that was initially hacked just like a month or so after the acquisition. And then it kind of went through a lot of governance turmoil, to say the least.
Pretty busy 1 year of existence. You raise a bunch of money, you merge with another protocol, you get hacked, and then you liquidate your and you go back to zero. Huh?
Yeah, pretty much. Unfortunately, a lot of people did not end up going to zero.
So what given was it safe to say that there was a lot of mistakes made here, or that this was a failed project, or was there anything that was successful about this, or is this just a story of a failed project, and now we're kind of trying to figure out how to give money back to as much as it's left in the estate? Or was there anything that actually came out of this before it ultimately unwound that was a positive?
Yeah, so I'll try to look on the right side here. They were one of the first projects that really started looking at like protocol controlled value, where the DAO itself will hold a lot of the TVL, build its own treasury, and really be backed by what I would consider book value. So this was one of the first projects that did it. Olympus DAO, all the Olympus forks are really what would be classified here.
Okay. So at least takeaways for other protocols and projects. And look, I mean, there's no shame in a company or a project not fulfilling its goal and ultimately unwinding, right? That happens all the time. That's not a big deal. I think, if you actually look at the blog that you wrote over the weekend, and for those who want to read the entire piece, you can go to our website, ar.ca/blog. But it sounds like, there's nothing contentious about the fact that a project failed. It happens. Where you came about was that once they decided to liquidate this DAO and give the assets back, right, there's some level of transparency and information that you would expect to accompany that, given that you have this protocol controlled value, right? You have these assets in a pot, and ultimately you have this Tribe token, which is backed by those assets in the pot. And it should be fairly straightforward. Right? Here's the assets over here. Here's the token. Let's give the assets back to the token holders. But it didn't quite play out that way. So why don't you walk through, some of the nuances that happened with this liquidation and why, in your opinion, this was a pretty bad outcome for token holders as well as really just governance in general.
Yeah. So one caveat there, I do think that giving assets back was the correct decision, and I will commend them on doing that. How it went about was questionable at best. So there were really three steps here in the process that needed to get done. The first was the consolidation of their assets. So trying to sell everything that they held in what was considered the treasury into either DAI
Pretty
or
straightforward. Nothing contentious there, right? You've got, some of your assets are in different denominations. You want to get it into stable coins. Okay, fine. I think probably little to no argument there.
Yeah, remove volatility. The second step that needed to be figured out was whether or not to pay back victims of the hack. So this is where things started getting a little contentious, because back when the hack did happen last year, there was an initial vote to fully repay all victims. That passed, and then a month later, after May happened, this year, May happened, you saw the Luna stuff, the whole market was going down. There was a second vote on this, and that it subsequently failed. So not only was all the victims left in limbo, so was pretty much Tribe itself. So what was interesting here,
so already a bad taste in the mouths of hack victims, because there was a vote that was supposed to reimburse them. It passed. Then ultimately, because of market conditions and events, they reneged on that. Okay, now you got a second chance. You got a second crack at it. You're doing this liquidation. Again, seems pretty straightforward. You'd think the hack victims would get their money back, but alas, what happened?
Yeah, so how they initially structured it was that not all victims were paid out a pro rata portion of what was hacked. So they decided to pay out everyone up to a certain level, where the largest people were receiving pennies on the dollar, and then the smallest victims were receiving their full repayment. So this led to Ohm and Frax, the two largest victims of the hack and the two largest victims of the repayment plan, to issue a bribe to all Tribe holders, where if you delegated to Ohm, you would receive who would then vote for a full repayment. You would receive an additional value on top of the liquidation value.
Okay, so that part's cool. Now you have a good use of governance, right? Which is, because there's still a vote with regard to how these assets are ultimately going to be distributed. You've got the two who have the most to lose, basically bribing people, saying, if you vote on behalf of us and we get this extra payment, we'll give you a piece of that payment. Okay, so there you go. There's one silver lining there. Good use of governance, a good tactic to try to get the market to do the right thing through incentives.
Yeah, really interesting use of token incentives. But while those discussions were happening, a lot of people began to realize that there was a ton of outstanding Tribe and Fei that was all having a claim on the PCV that probably should not have. So the main pieces here was an unannounced team wallet. We'll get back to that later. That one had some fun later in the process, and unvested equity, unvested Tribe tokens for venture capital, VCs in the space here.
So not equity. You're saying of the original investors in this project, as usual, when you have an early stage investment, not all the tokens vest right away. You're saying that once we get to a point where there's a fixed amount in the pie that needs to be liquidated and distributed to token holders, and there's going to be a fight from token holders over who gets all that, and all of a sudden here comes these unvested tokens that you could argue should have had no claim whatsoever because they're unvested. Here they are coming in saying, nope, that we get a piece of that as well, which would be weird no matter what, but it's especially weird when it's a failed project, right? If you invest in a failed project, sure, if you're vested, okay, you have a claim. But if you're unvested, that one's tough to hit. That one's tough. When I read that the first time when you were going over it, that one is really tough to swallow.
Especially when it was also an equity investment in Fei Labs, and obviously they had some cash on the balance sheet and other assets that equity would have a claim on. Additionally, when they also did a very weird thing with how they were vesting equity, not equity, tokens, where they put it into a time lock LP pair similar to an AMM. It needs two sides of a pool. So they minted a bunch of Fei out of nowhere, similar to like what an algo stablecoin did or would do, and added that to the VC's payment as well. So it almost essentially doubled what they were receiving, and then both that Fei and that Tribe all had a claim on the PCB here.
Okay, so padding their own pockets after investing in something that failed.
Yeah, so what it ended up really looking like, from the math here, and we included this in the blog as well, is that if you count the unannounced team wallet and the unvested equity, the team and VCs were taking roughly 50% of all of the value here. And that was after what I originally thought they had very good terms in terms of how they were structuring their token. The VC and teams originally had less than a 20% claim on all of this, with investors getting 5%. And that was originally laid out with their initial.
So hold on, you're saying in the initial white paper it was laid out where the team and the early investors were only supposed to get 20%, and then somehow a year later when it failed, they ended up with 50% of it?
Yeah, so from the original documents, the team was awarded 13% of all tokens, vesting over 4 years with a 1-year cliff. Same thing with investors at 5%, so they were at 18, and the same 4-year linear vest.
Okay, so, and you're saying 50% even after Ohm and Frax did the bribe and got some of that value back to hack victims. So you're saying that this could have been even more than 50% to the team and the early VCs had not for the creative bribe that got some of that value back.
It would have been more value, same percentage ownership, but yeah.
Right. Okay. Okay. Well, this is, and you do a great job. Again, I encourage people to go to the actual blog because we put a fair amount of tables and charts in there and links to some of the governance votes so you can see it all in action. But ultimately, okay, so you have governance. In theory, governance should have prevented an outcome that looks pretty lopsided and favoring a small handful of people who probably didn't deserve it. Like, what went wrong with the governance that allowed this to happen?
So a couple things here. The first, there were a ton of very smart people within this that were all looking on the chain, looking at the wallets and asking questions within the Discord for about a month and a half. Not once did the team ever answer any of these questions, or did any VC ever join into these discussions to try to make some sort of analytical plan. Additionally, because of the initial bribe that Ohm and Frax did, all of these Tribe tokens, upwards of 96 million Tribe tokens, were all delegated. And once Ohm and Frax had their hack repayment back, they had no reason to be doing any sort of governance whatsoever. So those tokens were essentially locked out of voting when the Tribe team went ahead and pushed a proposal for a full repayment immediately after the Frax proposal passed, the Ohm full hack repayment passed. So they pushed for immediate dissolution without any sort of discussion whatsoever here. And a lot of that was because there was many community members that were about to put up a proposal on whether or not this unvested equity should have a claim. So they completely skirted that and pushed for immediate dissolution.
I don't want to put words in your mouth here, but I mean, it sounds like this is pretty bad actors here, right? I mean, I don't know if we're talking about 1 or 2 venture firms or if we're talking 10 or 20, but it sounds like between the early venture investors and anybody who was on the original team of Tribe or Fei or a combination of the two really took care of themselves here and sort of skirted what should have been a more fair and equitable governance process. Was there a reason for a rush other than just being greedy, or was this just a pure land grab and let's take whatever we can get out of a failed project?
For the most part, it felt like a land grab here. I don't know whether that was the VCs pushing that or if it was mainly the team, but I would shy away from blaming a lot of the VCs here. I think this one's solely on the team.
Yeah, and it's a sad state of affairs, right? Because we've had, obviously ARC has done a lot in the governance space, right? We've been involved in fairly aggressive, almost pseudo activist like campaigns, like we were with Gnosis a few years ago. We've been involved in very amicable governance issues, things like Sushi and Nexus Mutual. We've seen kind of a full gamut of how governance plays out, and I think there's a lot of things that don't go well in governance, largely because sometimes you just have too many cooks in the kitchen, or it's just a messy process, or it's just democracies are hard, right?
Mhm.
Sometimes there's a reason why, or most early stage companies have one leader, and you sink or swim with that leader because you need someone to make decisions whether they're right or wrong. When you leave it up to a public DAO or public governance, there's a lot of wishy-washiness, just because there's nobody who can like kind of put the hammer down when it's needed. But on the other hand, there's parts of governance that seem pretty easy to fix, right? Namely, don't be, don't be a greedy thief. Transparency. Do right by the people who bootstrapped your project. Don't flip the vote last minute with undisclosed wallets.
Yeah, that was a big one for me.
How do you think? It seems like a lot of that played out here. I guess my first question is like, why are the bad actors in this case not being called out? Like, should they ever work again in this space? Where are the repercussions here for those who did this? And how do we actually publish some guidelines or put something out there that prevents things like this from happening in the future?
I mean, in this case, in terms of on what happens to the people that were behind this, it depends on if they ever get funding again. So that's really up to the venture capital firms there. In terms of guidelines, I think that is probably where the most value is going to come out of what happened here at Tribe. Is just like there will be more dissolutions. So there's got to be better ways where this can be an example of what not to do. So token holders get the full value out of, say, a dissolution. So everyone can come to like an amicable process where a project can be wound down successfully.
Yeah, I mean, look, it's obviously we're in the early stages here of DAO governance. It's obvious that there's some kinks to work out here, but I think most people in the industry believe that the spirit of being able to vote with your tokens and being able to be a part of big decisions makes some sense. In terms of cleaning it up, obviously we got to figure out which things are votable and which ones aren't, right? You don't want every single decision to be voted on, because that would be crazy. You get nothing done. At the same time, you don't want big decisions to be glossed over without hearing your voice. So again, there's a lot to get right, but I think the biggest issue is like why is this not a bigger story, right? Again, I mean, this is governance goes wrong 101. I mean, there's just so many things that could have been done better in this case and could have been done differently. And it wouldn't have mattered much, right? I mean, again, this isn't like a company or project that is a going concern where you have tons of long-term ramifications if you get this wrong. This was a liquidating DAO. I mean, this should have been as straightforward as it gets. Is it really just as simple as because of how many tokens were controlled by so few, that no matter what should have happened and what was pretty obvious that should have happened just had no chance of happening because of too many tokens were controlled by one or two small groups?
Yeah, I mean, the undisclosed team wallet came through over the top and voted for dissolution immediately, while the rest of the community was voting for more discussions here. Like it was really one actor coming through and pushing this through before any of these other important discussions could happen.
Yeah. Well, again, I appreciate you putting the analysis together. I think as a postmortem, it was a fascinating thing to watch in real time. But even as a postmortem, I think it is a worthy piece for people to read and look at. Whether you're a venture firm looking to back founders and really trying to use this as a case for understanding who are the people that you're backing, or if you're a community member or a token holder that wants to understand exactly what you're getting into, making sure you know exactly what the token distribution is. There's a lot of things in this case that I think will have long-lasting, ramifications for this industry. And again, this is not the first time we've written about governance. It's not the first time we've talked about it. It's probably the first time where we flat out called something a farce or said that this was just completely, ingenuous or disingenuous, rather. It's pretty clear cut. So again, I would encourage everyone here to take a look at this. Really look at the links that Alex provided in here, the timeline of events here. There is a way to make this process better, and I think again we will get there, but we're just not there yet. And I guess my number one takeaway, and I'm curious what yours is, Alex. My number one takeaway is just transparency. It's just always about transparency. There is just no excuse for not being forthcoming with. You don't need the SEC or the CFTC or another regulatory body to come in here and govern basic common sense and transparency. That should be something that's demanded by the community and can be solved under one guiding principle, which is just don't get into bed with bad actors. What do you think your major takeaway is from all this, having seen how this played out?
I mean, yeah, the transparency is the biggest one. Like, can't tell you how many times all these very basic questions on who would be receiving all of the PCV were asked and completely ignored. Like you would see different team members answering questions. The same person that asked the original question would then ask this question. Conversation was gone. That happened 100, 150 times in the Discord easily, just from what I saw. So yeah, it is unfortunate that this happened, but I think a ton can be learned for this to be a better process in the future, because it definitely will happen again. There's numerous projects trading below book value that probably should return some value. And I think this can be a really interesting and good process to return some value for different token holders, if both sides can come together and see where both sides are coming from.
Yep.
Yeah.
All right, great. Well, listen, anybody listening here, we'd encourage some feedback. We'd love to talk to you about it. If you were involved with Tribe and Faye, we'd love to hear your thoughts on the story. If you weren't involved and you want to, some thoughts on how to make this better in the process, Alex is always available. You can reach him. What is it? At @crypto_Alex17. Is that right?
That sounds right.
You can find Alex on Twitter. As always, you can find me at jdorman81. And you can find all of the materials we put out on our website at ar.ca. So that's it for this week, guys. Thanks for joining us. We'll be back again next week. And until then, let's see what happens with CPI this week and ultimately market direction. Thanks, everybody.